So do you think that if this passes and goes through, this changed the US Canadian tax treaty? So I was talking about it earlier, how the article said, and you can correct me if I'm wrong here, that right now, if you're invested in a US dividend paying stock, so as an example, Wells Fargo or Pfizer, okay? So regardless of whether that stock is doing well, poorly, going up, going down, if they pay a dividend, you're collecting money, dividend income on that money, every quarter or however often they pay out their dividend money. So let's say you're collecting $1, okay? So right now, before they pay you that dollar of income, they withhold 5 cents or 5%. Is that correct?
Depends. So if you're a
Okay.
foreign investor investing in U.S. securities, that
As a Canadian,
as a
I'm talking about
Canadian,
what affects
so
us.
yes,
Yeah.
there's a withholding tax that is deducted from the source. So they don't you actually if the dividend's $1, you don't get the full dollar. You get some lesser amount because you're typically as a Canadian not a U.S. taxpayer. So they want to make sure
Okay.
that a foreign investor, Canadian or otherwise, is paying something for receiving that income that otherwise would go to an American who would pay tax on it, likely.
Okay, so we're being so on your dividend income, you're being taxed that 5% before it even gets to you. And so then that 95 cents that's left, you're then being taxed on the Canadian side.
Correct. Your
Correct?
Canadian tax return will have that listed as dividend income, non-Canadian eligible dividend income, just regular other income, and that's going to get taxed likely at your marginal tax rate.
Unless it's in your TFSA.
Unless it's in your RSP or your TFSA, which I think is interesting, and not that I'm providing any sort of tax advice. Everyone should talk to their
No, I know. Yeah, yeah.
tax experts, but my understanding is that a U.S. dividend paying stock is not subject to withholdings tax in your registered retirement account, so an RSP or a LIRA, but it is
Yeah.
subject to withholding tax in a regular margin account or a cash account or your TFSA, which is not deemed a retirement account, a registered retirement account. It's
Okay.
very slight
So,
nuance different, but can be important if you're buying.
okay, so that's why they're saying this proposed change. So now they're withholding 5%. But what Trump is proposing is that he wants to say that over the next few years, it will get as high as 30%. He thinks that's the fair rate. So that's going to really affect Canadians' RSP accounts, retirement accounts,
Yeah,
and their
it's going to dramatically, if that passes.
and their TFSA, all our investments.